Woolworths cut 1,300 jobs. Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of HeiseSays. I've got my afternoon coffee in hand and I thought we'd have a look at this article from news.com.au because it's discussing Woolworths cutting 1,300 jobs. Now it seems just yesterday we were talking about Woolworths and Coles, so the big employers putting people on, as small business after small business was forced to lock down and, well, as only essential services remained open. Couple that with the retail recession that we've been talking about since the beginning of the year, well, this is definitely going to have an impact on the workforce. Retail is a big employer here in Australia, a big employer. So Woolworths, 1,300 jobs cut due to automated distribution facilities. Now, all the people that are arguing that automation is going to take our jobs and replace a lot of human activity, we'll have to see. Are they going to turn into Amazon, where they scale back the number of people that they need? More than 1,300 jobs are being slashed at Woolworths. The workers will be made redundant as the company invests in automated distribution centres. Woolworths today announced plans to develop an automated regional distribution centre and a semi-automated national distribution centre at Moorebank Logistics Park in Sydney. And we'll jump over here and let's have a look at the Woolworths share price. At the moment it's down 0.37%, down 13 cents at $36.52. I remember when it first went public. Do you remember when Woolies first had their share listing? About $3 or something? There you go. So let's have a look at the 6 months and you can see Woolworths did take a hit from February. I mean, it went up from January, shot up to 43 and went back down, a bit up all over the place. Let's have a look at 5 years. So we can see it's been climbing up with the market and has dropped down a little bit. It peaked. It did seem to have peaked. So the facility will replace the current grocery operations at the Sydney Regional Distribution Centre in Minchinbury, Sydney National Distribution Centre at Yennora, and Melbourne National Distribution Centre at Mulgrave. As a result, 515 jobs will be cut at Minchinbury, 540 at Yennora, and 298 at Mulgrave, 7 News has reported. So that's a large hit to employment just before Australia enters its recession, or just as we start down the road of recession. Now, we'll have to see. We've got another article looking at apparently, Woolworths, their earnings are down. But, there was a hit to retail spending with the recession coming. But, Woolworths, it's a grocery store. It's a bit different. Although I must admit, we've been shopping in Aldi for the last few years because, well, with a family our size and doing monthly shops, we really notice the price difference. We really notice the savings. If you're just doing a shop every week here and there, you don't notice it. But if you're doing one big hit, you notice that 100%. While 600 jobs will be opened up in a new centre, due to be completed by the end of 2023, 1,350 workers will be made redundant by 2025. So is this the beginning of a trend in reducing the need for employees? And what other opportunities are there? Now, I know in the past, people were discussing that the Industrial Revolution led to more jobs eventually over time. People got displaced. Can the people who need to maintain and operate and work in these facilities, could you transition? I'm sure some people could. Transition, upskill, educate, and take on new roles. Hopefully higher paying. It comes as the company expects full-year earnings could be 2.7% lower after it outlined one-off charges worth $591 million for restructuring and staff underpayments and incurs additional costs related to the pandemic. The retail giant said it expected full-year earnings before interest and tax to be in the range of $3.2 billion to $3.25 billion, compared to $3.29 billion last year. The biggest hit will be sustained in the Endeavour Group hotels and drinks business, with earnings expected to slide more than 50% to between 160 and 170 million, as venues stayed shut on account of the pandemic lockdowns. I can't say I'm too surprised with that. Some people perhaps don't realize how much of the businesses that we use are locked into these two behemoths, into the Woolworths and Coles duopoly here in Australia. And it's good to see other entries breaking in, trying to destroy that duopoly. It will also incur costs of $230 million towards restructure of the Endeavour business, which it originally planned to demerge this year, but deferred due to the pandemic. Woolworths' earnings will also be impacted by close to $275 million in incremental costs in the June quarter related to the pandemic for store hygiene, social distancing, and supply chain flexibility. The company will report full-year results on August the 27th. The retailer has further outlined $185 million to reimburse staff underpaid over nearly a decade. The total cost of underpaid staff wages is now blown out to $390 million after the company identified underpayments to employees in its hotel division in 2018 and 2019. So you can see here, I mean, this. I wonder why they're looking to reduce their headcount. That's the biggest cost saving. I wonder why they're looking to reduce headcount. Let's have a look here. This one, Woolworths earnings to dip as costs climb. Woolworths expects full-year earnings could be 2.7% lower after it outlined one-off charges worth $591 billion for restructuring and staff underpayments and additional costs. The retail giant said it expected full-year earnings to be in the range of 3.2 to 3.25 compared to 3.29 last year. Biggest hit was the Endeavour Group, so there doesn't seem to be anything additional in this article. Nothing else here. And, well, it's just another take on the same piece. Their costs are climbing. They're reducing their staff. Their hotel division is suffering. We can have a look down here. Woolworths said, okay, the facilities will replace current grocery operations in Sydney and Melbourne. Woolworths said it would invest $700 to $780 million in technology and the fit-out of the two distribution centres over the next 4 years, and has signalled an initial lease term of 20 years with Cube Holdings. The investment is expected to deliver a significant reduction in the group's supply chain costs over time. It will result in a one-off pre-tax cost of $176 million in financial year 20 accounts. Meanwhile, the retail giant said trading so far in the June quarter has continued to be strong, with food sales in Australia up 8.6% and in New Zealand up 15.1%. Sales at Big W jumped 27.8% in the 10 weeks to June 14, while the Endeavour Drinks business saw a 21.4% growth for the same period. In comparison, sales had grown in the low single digits during the first half of all four segments. By 1:30 Australian Eastern Standard Time, Woolworths shares were down to 36.58 in a broadly positive Australian market. Would you call it broadly positive today, everyone? Let's jump and have a look. I mean, here we go. I'll just refresh this. Slightly down. And let's have a look at trading and see how the ASX 200 are doing. Oh, well, down 2 points. Would you call that positive? I'd call it flat. But I guess 130 was a couple of hours ago. That doesn't seem to move that much as I've looked at it. So here we have it, guys. Woolworths looking at investing significant money to reduce costs and increase automation. Are we going to see more and more of that? This is one of the problems here, everyone. How much of the technology that you think that's invested in here has actually been manufactured in Australia, or how much of it has been imported from overseas and manufactured overseas? Australia isn't a technologically advanced nation. Things don't get manufactured here. Silicon chips don't get manufactured here. We just don't have the scale. We don't have, I know a lot of people are arguing for these investments here into Australia. We'll have to see, everyone. One of the problems we have as a nation is we're housing obsessed. Everything goes into property. How much is invested into other things? So here we have it. 1,300 jobs gone. Woolly implementing new technology. Who will be next? As always, please let me know your thoughts and opinions in the comments below. like, share, and subscribe to the channel. If you're a fan and want to support the work I do here, there are a few ways you can. You can simply join the channel on YouTube or Patreon. Support us via our affiliate links at Amazon or eBay, or Independent Reserve and Kucoin. Buy our merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Thanks everyone. I'll see you next time.